Good morning, good afternoon, good evening, everyone, and welcome back to the breakfast show. It's rate cut day. FOMC meeting happens later today. We also have Oracle's earnings report, Adobe's earnings report. After the market closes, we will be live. I'll probably do a live with Amit, so stay tuned for that, but that's after the market closes. Right now, we are before the market even opens, and yeah, currently it doesn't look that great, but we'll have a look at a lot of the names. We'll go and have a look at the expectations for Oracle and for Adobe. We do also have some commentary from some folks at CNBC. I do also want to show you, by the way, we also have some TSMC data. Adobe is apparently releasing and integrating Photoshop, I think Adobe Express, PDF, Acrobat, and all of that into ChatGPT directly. Okay, cool announcement. And then, then I want to show you one specific thing with regards to Apple, more specifically Apple services. It is again one of those business lines where it's just printing money going under the radar, but it is something that could help ChatGPT also going forward. I'll explain the link between both of those in a bit. But right now, if we look at what's going on pre-market, how does this work here again? I think if I press number 2, voila, perfect. And of course, welcome everyone in the chat, wherever you're watching from, late in the morning, late in the evening, late in the morning, early in the morning, late in the evening. Appreciate you all joining me on this on this Wednesday. So this is basically the pre-market action. The bright red looks way worse than what it actually is. Okay, I mean, Microsoft is barely down 1.3%, Meta 0.8%, Google 0.25%. We do have some names that are green. Novo Nordisk, for example, is green a little bit, 2%. Marvell has become in recent days like a small battleground stock for some strange reason, but we do have some comments on Marvell as well. Palantir is up 1.6, and then we have here a couple of names that are also flat to green-ish. With regards to PayPal, we also have some news, although not the biggest news out there, but okay, still some news. If we start, let's see, if we start with that, let me pull that one up real quick. We have people from Portugal, from Spain, from Thailand. I know some people are traveling in Japan, in China. Let's see if I can find the PayPal one. It's not the biggest news, but it is. So it's basically this. I'm not going to read all of it, but it's basically this. Blackbird Financial takes large stake on PayPal. Now, at first, did not know who Blackbird Financial is. Why would it be such a big deal? And by the way, today, if you're holding PayPal shares, you're getting your dividends payment today. So Blackbird Financial apparently has taken a significant position in PayPal. Assets under management last time that it was reported, was around $10 billion for Blackbird Financial. They're bullish on the name because they believe it's extremely undervalued, and they like the fact that the company is aggressive with its buybacks. They're not looking for any board seat at the moment. So this is the news that came out early this morning, late yesterday, depending on where you're at in the world. I don't think it's such a big deal. I mean, it would have been a bigger deal, of course, if, let's say, Elliott took a stake in PayPal, but that would mean like really an activist investor coming in, probably looking for a board seat. And then I would be afraid that they would like maybe to take the company private or something like that. But for now, it's just this. They take a large stake on PayPal, $10 billion in assets under management. And that's about it. We'll see how things evolve from here. But that's quickly touching on the PayPal stuff. Rachel, thank you for becoming a member of the channel. I really appreciate that. We need old Warren Buffett to take a stake. Well, it's not Warren Buffett, but maybe Berkshire. Yeah, such news would definitely move the stock for sure. Then if we go and have a listen, because Oracle reports later today. As you know, Oracle and Adobe report later today. We've talked a little bit about Oracle yesterday. So if we look, again, Oracle has seen its stock rebound a little bit. Right? It went under $200. We have seen the stock recover a tiny bit. But if you look at the last 3 months, still down 32.5%. Year to date, it is still up 33%. But of course, the stock peaked at around $330 or so 3 months ago when they reported their quarterly figures. They talked about that huge RPO number, would probably exceed $500 billion or so. And so today is the big day. This is, of course, a company that has a lot of plans in this whole AI market, AI race, right? And so today, what the market and what I think most of us investors would like to hear is what happens not 5 years from now, but what happens today, or what has happened in the last 3 months, and what will happen in the next 12 months. And so with that, let's have a listen. A 2-minute clip here. Some dude, you probably know him, on CNBC talking about Oracle.
And the market is saying there's a 90% chance we get a rate cut at tomorrow's Fed meeting. But what kind? We'll have to listen closely to Chair Powell's comments for clues on the future cuts and the balance sheet. Joining us now is fast money trader Guy Adbe, co-founder of Risk Reversal Media. Guy,
hello,
good
John.
to see you. What are you listening for from Powell? Assuming, 90%, hey, that we get the cut.
Well, it's amazing, and thank you. Hello, Morgan. Hello, John. Thanks for having me, as always. It's amazing that at one point over the last 3 weeks, we got down to a 35% chance of a rate cut tomorrow, and I didn't know where that came from, but here we are at basically a certainty of it happening, and it will happen. What am I listening for? Is he going to pivot once again? You know what? Although the job market we're concerned about, inflation remains problematic, are we going to sort of get back to that inflation is a problem? Because if we get back to that type of language, I don't think the market's going to interpret that way. And I'll tell you, there's this old, for you sports fans out there, there are people that believe if they put their hat on differently or put it on inside out, they can somehow affect the outcome of a game. That's the same way the Fed affects the outcome of interest rates. They're going to cut rates tomorrow, but I'm still pretty convinced that the 10-year yield is going higher from here for a myriad of different reasons.
Yeah, sports fans and also, by the way, space enthusiasts, very similar in terms of some of those.
Is that a true thing, or are you just saying that to make me feel good?
No, it's a true thing.
Okay,
so let's move on, Guy, because in addition to the Fed tomorrow, we've got Orcl reporting. It's up 10% in the past week. It's down 21% this quarter. I know some of the folks that watch things like technicals are watching this very closely to see if it continues to recover here. What are you watching? I
think it will recover. I went back and listened to and read all the things that came out on September 10th when it announced that huge revenue deal, and the stock obviously traded at levels where, in my opinion, it should have never been, because they told us about the revenue. They didn't tell us about the earnings, and I was pretty convinced we'd back and fill in that gap at 255. I did not think it was going below 200, but I think the way the quarter sets up and the way the stock is trading, I think this relief rally that we're seeing is to continue, and I think you will see a bounce somewhere between that 250 and 255 level. And in a number of different ways, that's what makes sense. It should have never gotten to 3.25. It should have never gotten below 200. But I think sort of equilibrium for this name is probably around 255.
So part one is the rate cut, right? For later today, right? A month or so ago, probability really was at one time during the live stream we did look at it. It was at 27.5% probability of a 25 basis point cut, which is happening later today. Today we're closer to 90%. But as it says here, first of all, the 10-year already sits at 4.2% today. I think 2 weeks or a week or so ago, it was just under 4%. Now, as he said, later today, we know a rate cut is coming, but the markets are, let's say, pricing the rate cut in already. The question now remains is, what does Jerome Powell say? Does he sound hawkish? Does he sound depressed? Is he going to tank the market? Is he going to say that based on the available data that was unavailable to the public but available to us, we are willing to cut by 25 basis points, but we remain vigilant on XYZ? It's possible. It's possible. I mean, again, 6 months from now, this guy is going to be replaced. I mean, he's going to be replaced in a month, but he still will have his job for the next 6 months. So what is he going to say? Because remember, 3 years ago, inflation was transitory, right? Inflation was transitory. And then suddenly, oh, shit, it isn't. So let us go from almost 0% interest rates all the way to 4% just like that and destroy everything. And now it's, okay, we are looking at data, which a lot of the data that they are looking at have been behind, right? Those are lagging indicators, but fine. I think we could have been in a way worse situation right now, but okay. I still believe they have a lot of flexibility with this whole rate cutting cycle right now. You might cut maybe a little bit too much, but again, it's not like they're cutting 50 basis points, although some people try to float the idea that, they're going to cut 50 they're not going to cut 50 basis points. There is no way that's happening. 25 basis point cut, I do believe, and we're going to have a listen to someone else here that talks about, is it this person or the next one? This one, where she talks again about what happens next year, because next year we will be getting more rate cuts. Again, we're going to get the dot plot. We're going to see what the expectations are for next year. But you have a problem with housing. You cut rates, should help that. Labor market, if it's so weak, you cut rates, should help that as well. Then yes, you can get in a place where, but if you cut too much, then you might not get inflation under control. But maybe we are already getting inflation under control. Maybe AI is going to have its effect on inflation, which should be deflation. We've seen PepsiCo, right? PepsiCo will reduce prices of various products after reaching an agreement with Elliott Management. So we'll see. I do think that, I think someone said it in the chat yesterday perfectly. You can be a bit more aggressive on the rate cuts because it will help housing. It will help the job market. And then, yes, there are still some ways where you can control inflation. Again, it's not like we're going suddenly from 4% all the way to 1% interest rates. No, we're still going to stay in the 3 to 4% range. Well, less than 4% starting 2026. Now, let's hear, because yesterday we heard about Dan Ives talking about, okay, next year, 26 is also going to be another bullish year. Someone asked in the chat, what were the probabilities of having 4 years where the market returns over 15%? I don't know. I'll try to find out if that happened before. It probably did. Because like from 2010 all the way to 2020, I think we've had many, many years where the markets were green, but maybe not 15%. So we'll have to look at that. But let's hear what
Joining us right now to
she
talk
has
more
to
about
say.
the broader markets is Megan Shu. She is Chief Investment Strategist at Wilmington Trust, also a CNBC contributor. And thank you for coming in this morning, Elizabeth. Megan, sorry, Elizabeth Shu. That's what's in my head. Megan, thank you. Let's talk a little bit about where you see things with the Fed meeting today. I know you're of the opinion that they should cut. And, you know, this is a pretty difficult time for forecasting with what the Fed's going to do just because of the divisions on the Fed. Yesterday, we had former Cleveland Fed President Loretta Mester here, and she laid out the case saying, look, inflation is still above target. Sure, we're worried about the jobs market, and that's kind of where the focus is at this point because that's been the biggest change. But there are some pretty hawkish people who will look at that and say, you got to worry about inflation first. What do you think that means for the markets from that perspective if you have this, okay, we're not sure if we're going to get more cuts after today?
Yeah, when we do think you're going to get more cuts after today. And
what do you think, 3 more next year?
We think 3 more next year, which is pretty much in line with where the market is. And I think if you look at both sides of the Fed's mandate, we are, yes, still above target on inflation, but decelerating slowly, but getting there. And the underlying drivers of inflation, I just don't think are there outside of tariffs, which I think the Fed has generally acknowledged will be transitory and will pass through. Whereas on the labor market, we're still operating in a data fog. So the Fed cutting today, I think, makes sense. Yeah. We've got signs that there is weakness in the job market, especially in smaller firms. So kind of that two-speed economy with large firms and small firms. And I think that weakness is worth hedging against.
Transitory inflation, you're very brave.
I know, to use that word, right?
Yeah, so do you think that Powell he's going to give lip service to the hawkish cut language? I mean, he'll do that even though...
So first of all, here you get the overview of the 30, 10, 5, and 2 year. Probably later today, they are all going to be a bit higher after the cut, and probably after the comments there as well. And she's basically saying what I think most of us are saying, right? Rate cut, he'll sound hawkish, he'll focus more on inflation and not much on maybe housing and the unemployment, because unemployment for now is still, I would say, in check. Inflation is also still in check, although we are flying blind a little bit here, but I would assume that they have data that was not public. I would assume. I don't know. I just assume that they have data that is not made public to us right now, where they can see what has been happening over the past month or two. And I mean, maybe I pull up because there is this website, right, Trueflation, where we can see where we are at the moment, approximately based on their real-time data, and they've always been lower than the real inflation number. Let's see if I can pull this one up, and in the meantime, let's finish up.
He doesn't know, but do you think he also agrees with you? There'll be 3 next year, but he's not going to show his hands right now?
Well, I think the Fed not showing their hands shows up in the dots. And then the commentary, I think the market will probably interpret it as hawkish. But I think anytime you get close to target on both sides of the dual mandate and you're getting closer to the neutral rate, which whatever you think the neutral rate is, we're getting closer. I think you have to recognize that the Fed's not going to give that forward guidance that we got so used to for so many years. So hawkish, neutral, what have you, I think it's meeting by meeting, and it depends on the data, which, again, we just don't have great data right now. We're relying heavily on second-tier data until we get basically to the first of the year and get back into the normal cadence.
But you think the Fed is going to cut, and at the same time, you don't think the labor market is a disaster because you don't think the market is topped out here?
I think the market topping out and the labor market are definitely related. I don't think the labor market's a disaster. I think the problem is that we do have reduced supply, which we've talked a lot about. So we're running closer to zero, if you will, in terms of that neutral run rate of job creation, if you will. So there's less room for error We're not talking about adding hundreds of jobs, hundreds of thousands of new jobs every month. If the labor supply supports maybe 30,000 net new jobs, all it takes is a little bit of volatility on either side, and you're talking about negative payroll reports, which then spark recession fears again. But I think we are talking about, we are optimistic for next year and looking at not a top in the market anytime soon, more volatility around tech names and non-tech names, but expecting the bull market to continue. And the first quarter could be a little bit of a digestion phase, if you will, maybe rebalancing, maybe some other, global issues, whether it's
Okay, so this year, and by the way, I found it. So this year, what we have is the first quarter of the year, quarter and a quarter, I would say. We had like a market that was trying to find the direction. Right? We've had we had a new president come in, tariff story, and so the market took 4 months or so to decide what direction we're going to. Next year, in a month from now, I do think that the market will just continue the direction it's going to at the start of the year, maybe the first half of the year, and then maybe second half of the year, based on, of course, 2, let's say, earnings seasons, more economic data, etc., we might be getting more questions because a lot of the market, a lot of the analysts, a lot of investors are going to start to look at, okay, 25 was fine, 26 just continues what 25 has been doing, but now we're entering the phase where, okay, what's going to happen in 2027? Because then you're going to enter year 5 of this whole AI cycle. And so maybe, and plus you have the midterms in the US second half later in 2026. So I do think that start of 2026 should look much better than the start of 2025 because there, in my opinion, will be way less uncertainty around policies and whatnot. Second half might feel like the first half 2025. But again, that's just my opinion. I don't have a crystal ball and I might be completely wrong. Now, going back to the inflation stuff. So Trueflation here tweeted out the following thing. So the FOMC will decide if we're getting the last interest rate cut of the year. The market already priced in 25 basis points and some hope for 50. I don't think 50 will happen. Trueflation's macroeconomic data for December 10th is as follows. So Trueflation US inflation, CPI, sits at 2.52%. Core CPI, 2.42%. US PCE 2.2, core PCE 2.67, employment for November 143 million, total non-farm payrolls, and new payrolls in November is a negative 26,000. Their data is sourced from over 100 providers with over 100 million data points automatically analyzed each day, and it provides a more accurate real-time view of the economy. So of course, their data suggests that they welcome, right, a rate cut. Inflation is much lower than what it's not fake or real number. Their data suggests that we are lower than what the number we used to be getting from the CPI, PPI reports from the Fed. Whether you want to believe these numbers or you want to believe the other numbers that will come out is up to you. Use both data is what I would say. Just like every time we look at data from what has happened before, what might happen in the future, don't focus on just one thing. Use every possible data point to your advantage and then make your own conclusion. That's what I would say. I also said at the start of the year, and I think last year as well, that I don't understand why the Fed doesn't use, every data point, every possible data source possible. I also don't understand why in 2025, almost 2026, we're always using data that's already old, let's say. We should be getting real-time data. Now I understand, but you need to understand there is just so much data, billions of dollars flowing in every direction, hundreds of billions of dollars. It will be impossible. I don't think it is impossible. I think it's just laziness and legacy systems not being able to handle it. But you're in the United States, I believe you should be innovating, and these types of things, especially these types of things, could be done on the blockchain, should be accessible to everyone. The data should be transparent and everybody could be looking at it. It shouldn't be that much to ask. Because on the one hand, of course, investors, right? This is not me saying, I think Peter Lynch said it. If you spend 30 minutes listening or studying a macro, you've wasted 28 minutes or something like that. Macro is cool for shorter moves, etc., etc. For the long run, focus on the companies that you own. But yeah, I do think that there is just too much attention on these monthly CPI, PPI reports. What will the Fed do? What will the Fed say, etc., etc. If these things were way more transparent and the data was made public anyways, we would not have this, oh, FOMC meeting, markets will crash because XYZ happened 3 months ago and this is what we're getting today. To me, it doesn't make much sense, but it is what it is. It is what it is. Then, quickly touching on Marvell. So Marvell has been turned into some type of battleground stock because of, well, the acquisition, the earnings report last week, plus the fears of them maybe losing AWS as a client. And so that's why you've seen it drop a little bit, although it did rebound quite nicely since the end of November. And so we do have the CEO really touching on that aspect in 2 minutes.
But let me just tell you what happened. So as you said in your intro, we announced our earnings last Tuesday. Right. Stock performed very well after hours and the next day. I think people love the messaging. And like you said, I was very optimistic and very confident in the business, not just next quarter, not just next year, but on a multi-year basis.
Right.
And I actually laid it all out, Jim. This was the longest script. And
it was long. It took me a little while, candidly.
I ever did, but I did it for a reason. Right. I did it so that I could get the transparency out there. Okay. And so that was last Tuesday. Now, somehow between last Tuesday and Friday, somehow we lost, one article said we lost a huge piece of business, which I had just said on Tuesday, not only are we going to deliver that next year, I have the bookings.
Thank you.
The backlog.
Thank you. I said that earlier. I could not believe they could get away with writing that.
So those orders are on the books. That's done.
Okay.
And then the other one was about, again, a potential lost piece of business in the future.
And Broadcom's a tough competitor.
And what I would say is, look, we have deep key relationships with all the major U.S. hyperscalers. Deep relationships.
Including a warrant situation with one that...
That's right. At AWS, and it was actually a year ago when I was on your show, we had just announced that, which was to buy AI custom products from us.
Right.
Networking products, and then with the Celestial acquisition, I don't know if you caught this, but there was an update to the warrant agreement.
Yes, there
So we
was.
added silicon photonics and photonic fabric as a third swim lane to the warrant structure.
Right, and it's
The only thing I would say here is the fact that if Jim Cramer is bullish, then that would be bearish. That would be bearish. But anyways, this was Marvell CEO talking about basically the reports that have come out recently about, oh, they are going to lose or they might be losing AWS for Trainium 3 and 4. I mean, like I said yesterday, I don't own Marvell. I think a lot of you do, and I think Jose owns it as well. But he basically came out and said, look, we literally just reported our quarterly figures. We said this is going to happen. We said this is already happening right now. And now these reports come out. It doesn't make sense. But okay, I mean, we've seen a lot of reports recently about AI and certain companies that have been refuted by the actual companies, right? Like Microsoft. The information, or should we call them the misinformation, comes out with reports and articles. Actually, in the last couple of months, they came out with certain things that turned out to be the complete opposite and a lie. But okay. We did have here TSMC's November revenue report. So what we're seeing is the following thing. For November, we've seen a 6.5% decrease month over month, but a 24.5% increase year over year. And year to date, year to November, I would say, revenue is up 32.8% year over year. Their outlook for CoWoS has also increased for 2026. So again, everything leads to continued, I would say, continued success for TSM and of course for the likes of NVIDIA, AMD, and everyone else that is using TSMC, which is basically every big player out there. Because if you're not using it, then probably you are on the losing end. Then, couple of things here. One, so Adobe reports later today, same as Oracle. Adobe did launch Photoshop, Express, and Acrobat apps directly in ChatGPT. We do have here more news on Google Cloud. S&P Global taps Google Cloud to supercharge AI transformation. Google, despite the stock's recent rise and people think that it's too expensive, it's the top, blah, 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 Google Cloud continues to win. And I do believe that 2026 is going to be another great year for Google, the company, whether it's YouTube, whether it's Google Cloud, and especially also Waymo that sits in the other bets category for them. So the poll is up. So if you want to vote, stocks stay green, red, or flat, you can vote, and then we'll end it right before the market opens. For now, 60% of you think we are going to end the day green, 27 red, and the rest flat. Let's have a quick look at the situation right now of the market. With regards to Adobe, let's see where we're at. It's up a little bit right now. So they report later. If you were to buy, and I'm not just answering this for Adobe, I'm answering this for every other stock out there. So a couple of scenarios. If I were to have a position already, I would not buy before the earnings, right? Because if the earnings are good, my position will already increase, and then I'm adding afterwards if I feel comfortable with it. If I don't have a position going into the earnings report, two scenarios. Well, two ways of thinking about it. One, do I like the price today already? If the answer is yes, then I open a small position. If the answer is no, then the answer is no, and we'll wait to see what happens after the earnings. Now, I know the comments are going to be, yes, but what if the stock goes up after the earnings report? Okay. If the stock goes up after the earnings report, that means the results were probably quite good, and I should be okay paying a small premium because I just got the information that I required and made me more comfortable buying the shares, even if it is 5% higher or 10% higher. So that's just the way I'm thinking about these things. But for me, a lot of these moves have been about whether or not do I really want to own it or not. If I really want to own it, then I have no issues buying a little bit. Of course, don't go all in before an earnings report. You buy a little bit. That way, again, if it goes up because the results were good, your initial position is up. If it goes down but the results were good, you can add more and, well, add more shares. And if the results were bad and that's why it's down, you just take a small hit and then you can do whatever you want with it. So let's have a look per category here, shall we? No, wait, maybe this is better. A little bit better, not by much, not by much. So if we look at our financial names here, we have Pagaya that's down 0.8%, dLocal 0.7 at the moment. Webull, yesterday Webull went back above $10. I do believe they were also included in some small index yesterday. So it's back above $10. Sezzle was up, but It's still above the 50, still above the 50-day moving average. Affirm is down 0.4, Chime 0.3, same for Block. I would say the same for Hood here, sitting on that 50-day. SoFi 0.2% down, same for PayPal. Dave was down yesterday 3.8%. Now it's basically flat-ish. Shift4 is flat. Same with Nu. I would say same with American Express. Then you have Visa up 0.1, Klarna 0.3, MasterCard 0.4%. As for the neoclouds, we have Nebius that was down yesterday almost 4%. It's down 0.3% right now. White Fiber 1.3. CoreWeave yesterday had a good day, up 5%, back above $90, although right now it's just under 90, down 1.3%. Hut 8 is, I would say, flat to green. Iron down 0.7, Cypher 0.8, and Applied Digital yesterday closed out the day up 2%, and it's down 1% right now. As for the chips, Marvell is now rebounding a little bit, probably because of the CEO's commentary. TSM up 0.5, Qualcomm 0.4, Micron same thing, AMD basically flattened, and all the rest are flat to down 0.3%, not by much for the chips ones. Then Meta down 0.6%. You see here a clear rejection on the 50-day and the 100-day moving average at 675. Maybe it will just close here that small gap that happened at the start of December, Wednesday to Thursday. Then we have Google, still around this same range. That's fine by me. Oracle up 0.4% going into the earnings report. Microsoft is down 1.7%. Let's see if we have, maybe we'll have some news. I didn't see that they are going to invest quite a lot in India, so maybe that's why, but I don't think so. Netflix is basically flat. Apple 0.1%, Amazon 0.6% up, and Tesla is up 0.4%. Regarding Apple, I wanted to show you guys one specific thing here for Apple. So if we go and look at their services revenue for Apple over the last 12 months is $109.1 billion. $109.1 billion business that's growing 13.5%. This is where Apple Music comes in. This is where the iCloud business comes in. And I do believe this is also where the payment from Google Search and Samsung, I think, come in. This is a crazy business. This is a business that has been growing low double digits for the last couple of years. I mean, probably last 5 years, I would say. Yeah, I mean, over the last 5 years, this business has grown at a compound annual growth rate of 15.2%. Now $109 billion in revenue, probably high margin business, growing 13.5%. Insane. Now, we know that Apple is an amazing company when it comes to cash flow, dividends, buybacks, and all of that, and maybe lacks the innovation at the moment. And maybe this is, the reason why, to me, is because they're too comfortable with their situation. They know their business, their core business is extremely profitable, and they don't care, right? They don't care that they don't need to be first with everything because, look what's been happening over the last couple of years. Now, I was thinking about this because, I assume if you have an iPhone or MacBook or whatnot, you are paying for iCloud, right? That, what is it, $1, $2, maybe $3, maybe if you want really 2 terabytes of storage, maybe a little bit more, but let's say it's $2 or something like that. It's not that much money for you, but if, 100 million people pay it, probably more, it's a lot of money. It's a lot of money coming in each and every month. And I was thinking, ChatGPT has around 800, 900 monthly active users. What if, let's say in a couple of years' time, because it's integrated in your daily routine, because it has partnerships with literally every big company out there, right? The Bookings, the Canvas, the Adobes, Expedia, Uber, whatever, you name it, right? It becomes your personal assistant for everything. Let's say it happens. Suddenly they say, what if we make this service a premium service, not free anymore? We just ask $1 per month. Or maybe there is going to be a standard service that's free, but if you really want to have the best ones, $1, $2 per month. Let's say in a year from now, they'll reach 1 billion monthly active users. If they charge $2 per month to the billion users, hypothetically speaking, that's $1 billion. Let's take $1 billion per month that comes in. That's $12 billion a year, just like that. Just by charging $1 for the service. Will this happen? I don't see why not. Because for the user, it's just $1. Would you care? Probably not. Especially not if it becomes your AI assistant and it can do a lot of things. Would you mind paying even $2 for it? Probably not. So we go from 1 to 2 billion, from 12 billion a year to $24 billion, just like that. Now I can see them starting to be a bit more of a real business that can be monetized. Because currently, okay, $900 million monthly active users, but how many of them are actually paying? Right? How many of them are actually paying? That's the question. We don't know. Probably, I would say 10% or so are paying. Plus the subscription is not $1 or $2. It's closer to, what is it, $20 per month, or I can't remember. The power users are paying $200, and maybe there is even more than that for enterprises. But for the normal user out there, if they would charge $1 or $2 in the next year or two, I do think that just like that, they are going to suddenly be making billions of dollars in revenue. And what did it cost them? Not much to just ask that extra dollar. So I was thinking, maybe that's what's going to happen. And then we go back to the same conversation as yesterday, which is the hardware device. Is it going to be so much better than what we have? Yes or no? Because if the hardware device is successful, then of course they can ask way more than that. Or maybe that's the way for them to be asking just the $1 or $2 subscription per month. But if it becomes very successful, the hardware device, then they will probably be asking more than that. Apple will keep taking their 30% Apple tax on all apps. Correct. Unless there will be a way for, again, it's all about the device, right? Unless there is a new device with a new platform, which is, again, Google, okay, there is the Play Store, so same thing there. But that's what Meta is trying to do with their own platform, AR, VR glasses. That's probably also what an OpenAI will start to do, right? If they create a hardware device, they would like it to have its own platform. And you bypass Apple that way. Plus, didn't something happen this year with Apple and Epic Games and the ruling there or something like that? But yeah, Apple will keep taking the tax payments from every single app that runs on iOS, basically. Thanks for the super chat. Appreciate that. What do I think of critical minerals? I think they are critical. And the rare earths are, despite their name, not that rare, because you can find them in a lot of places around the world. It's just that not that many companies and countries have the capabilities of mining and refining, and that's the issue. That's the issue. Now, some people here asking about rare earths, uranium stocks. As I said before, it's not in my circle of competence, nor is it something that I am that interested in at the moment. I know, we've seen crazy runs for MP Material, for USAR and some other names out there, but great for those that have held it, Me personally, I don't feel like I missed out on anything. It's just not something that I've studied much, looked into. I know it's important. I know that there are lots of political fights around it right now. Let them play. Let them do whatever they have to be doing. I'm not, as you know me, I'm more interested in fintech, in neo clouds, and in big tech companies. And that's it. And it's fine. I don't have to be invested in every single thing that pops up. Just like quantum computing, just like nuclear, and just like every other gene editing or whatnot, I don't have to be interested in it, or maybe have an opinion on it as well. So yeah. Why is nobody talking about Uber anymore? I'm pretty sure I talk a lot about Uber. We've had some from data from Uber yesterday that came out. So Uber right now is back here just under $90, but let me pull it up. Uno momento, por favor. Let's see. Uber, where is the Uber guy? Because yesterday they did tell us how many rides per day they're making. Where is that post? Maybe this guy has it. Should have bookmarked it. But it was an insane amount. It was an insane amount. So let me see. Here it is. Here it is. So Uber plus Uber Eats crossed 300 million trips. 300 million trips in a single week for the first time. That's up from 250 million a year ago. That's 900,000 trips every 30 minutes. Can you imagine? Can you imagine? 900,000 trips every 30 minutes. And this happens with Lyft growing. This happens with Waymo growing. So it seems like the whole market is growing. It's not like right now we have, Waymo taking market share. Well, maybe they're taking market share because they're going from 0 to a couple of percent. But in one single week, 300 million trips, 900,000 trips every 30 minutes. So we've now streamed for 47 minutes. That's probably close to 1 million trips that have happened since I went live. Insane. Incredible stuff from Uber. Of course, I am biased when I talk about Uber because I do own the stock, and I'm quite happy that I own it. Then going back to some interest rates cuts talks, we have here some more comments on that, which might answer your comment right here. My thoughts, my opinion on rate cuts. I've heard some people say that it just happens if the economy is bad, and that rate cuts happen right before years of negative S&P 500 growth. I mean, we've literally had rate cuts and we're still having quite a good year for the S&P. Plus the argument that they're cutting rates because the economy is bad would be true if they cut rates aggressively and tell us that they have to cut rates because the economy is very bad. But right now they're cutting rates quite slowly because it seems like the economy is not as bad as expected, but interest rates were still too high. So we have this luxury of seeing how the economy evolves while still cutting rates slowly but surely to keep inflation under control. But to say that we're going to have years of negative S&P 500 growth, I mean, we've been cutting rates for a year now, and we've been having quite a good year, I would say.
All right, well, we are less than 24 hours until the last Fed decision of the year, with traders pricing in a near 90% chance that the committee cuts interest rates by 1/4 point tomorrow. For more on the market impact, let's bring in Fast Money friend and Richard Bernstein Advisors Deputy CIO Michael Contopoulos. Michael, great to see you.
Nice to see you too.
Let's assume that there is a cut. What is the commentary going to be like coming out of that cut?
I think it's going to be hawkish. When you look at the data, I'm not entirely certain there's a real compelling reason to cut interest rates tomorrow. I think they're going to do it because the market is telling them to do it, and they very rarely disappoint the market. But there's enough dissent amongst the FOMC committee members where I think Chair Powell is going to have to come out with his cut, but then kind of talk the market a little bit hawkish and say, listen, January is certainly not a sure thing. In fact, it likely won't happen. And the balance of risks right now are pretty much tilting towards tighter versus market expectations rather than easier.
Yeah, so let's extrapolate a little into 2026 then, Michael. We've been talking about this for a while, but the assumption that the Fed will in fact be dovish and will deliver cuts next year because there will be a dovish chairperson put at the helm. But the fact of the matter is it's a very divided Federal Reserve right now, and we don't actually know what will happen. We don't know what will happen at the longer end. I'm just wondering how you think about that and the possibility that the market could actually be disappointed because they might not get what they're pricing in right now at these valuations.
Yeah, I think much of the rally we've seen over the last 6 months or so, Melissa, has really been driven by liquidity and the expectation for the Federal Reserve to cut interest rates next year. And to your point, I don't think that's really sustainable. There's not a good reason to do so. If the next chairperson were to come in and cut interest rates and inflation remain around 3% or even go higher, if economic growth continues at sort of the level it is now, you're going to see meaningfully higher interest rates. And that's actually going to put a dent on some of these high valuation speculative excesses within the market. And that's not just, sort of AI. I'm talking about cryptocurrencies, credit spreads, meme stocks, SPACs. I mean, they're all liquidity driven investments off of expectations for an easier Fed. So from my perspective, this is one of the biggest risks to the broad markets at the moment, but also creates a lot of opportunity as well.
I don't know what data he's looking at, but if the economy, which again has been growing much faster than what a lot of these people on TV were expecting, does continue to grow like this, I mean, talking about GDP and all of that for in 2026, with possible acceleration from here, then I don't see why he's saying that rates are expected to go higher next year. I do agree with point number 2 here, that the Fed won't cut in both December and January, because previously, a month ago, when the probabilities of a rate cut in December were 27-30%. The probabilities of a rate cut in January were at closer to 90%. So it was just a matter of, are we cutting in December or January? I do agree that I don't think we should be expecting a cut in December and January. So I agree with that. But yeah, I mean, right now, if you look at GDP growth, if you look at the data that we did get or are getting still, it's always, it's actually better than expected. And so going into 2026, suddenly everything's going to change for the bad because what? Again, if there are more data points that would suggest that GDP growth is going to slow down substantially, unemployment is going to go to 5% and up, and inflation goes back over 3%, then okay, I would say, yeah, there is probably going to be an issue here. But for now, nothing points towards that outcome as of now. Then we have a couple of minutes left before the market opens. We do have some news. One, you guys asked me about some rare earth stuff. So apparently USA Rare Earth announced a significant acceleration of the commercialization timeline for its round top-heavy rare earth deposit in Texas, targeting 2028 production, 2 years earlier than previously anticipated. Voilà. That's what we get here. And then we have some SoFi news. So they unveil their smart card with 5% grocery rewards and 4.3% APY, which is quite good. So you get 5% cash back on grocery purchases, up to 4.3% APY on SoFi savings balances for 6 months. No interest charges or hard credit pool required to apply. Dynamic credit limit based on account balances. $0 fraud liability through MasterCard protection. Easy person-to-person payments, Zelle and bill pay options. Should have used Venmo. Come on, Noto, come on. That at least help me out here. Fee-free access to over 50,000 ATMs globally and exclusive to new SoFi Plus members starting today. Of course, the SoFi Plus membership is a good way for them to just generate consistent high margin revenue, right, through a subscriptions like Robinhood Gold and a lot of other subscription services out there. So if you have a SoFi account, if you're paying for SoFi Plus, 5% cashback on grocery stores at grocery stores is a pretty good deal. So it starts off available to new members who join SoFi Plus. And yeah, for those of you that own a MasterCard, I guess this is another small win for MasterCard. Let's see if there are some things here in the fine print. So Walmart, Target, Costco, Sam's Club, they're all not, and Milky Delivery Service are not considered grocery stores. Aha. So this is an important thing to note. I don't know what's left here then. Okay, I don't think that's why they raised the money, but always good to have these types of small announcements. Some less positive news with regards to Intel and AMD. They're accused of failing to block chips in Russia missiles, according to Bloomberg. Let's see if it has an effect on their stock before we open the markets. It does. It does not. It does not. What do I think about C Limited? Yeah, I do think that the recent pullback in C Limited is a bit overdone. It's a company that has been doing very well, and the stock has been doing still very well. But yeah, the recent pullback is could be opportunity for those. I did cover it a little bit, I think last week or so. C Limited, let's see, yeah. It's now down 36% or so from the recent top, but if we zoom out a tiny bit here, it has been doing quite well for the last 2 years. Okay, maybe can it go lower? It can. Maybe it will revisit here the 100 day on the weekly, on the daily. It is a bit in no man's land at the moment, but the business itself has been executing. The business itself is growing, and they are also doing quite a lot of things to stay profitable. So it's a good business that has been executing well. There is just now here a pullback. It's also a name that has been linked with, well, if there is something China, this thing goes down as well, although it's not a Chinese company. So for those that want to add more, I guess these prices are better than the ones here closer to $200. Time to sell a bit of Rubrik? No, not really. At least not for me. At least not for me. And with that, let's get ready to open the markets. Thanks for the reminder. And so Ladies and gentlemen, the markets are open. Ding, 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 ding. Bing, bing, bong, bing, bong. Markets are open. We are seeing a lot of red. We are seeing some green. So, wonderful stuff. Wonderful stuff. That gong here on StreamYard does remind me of the start of the Mortal Kombat team. I was fully expecting some Mortal Kombat stuff to to come right after this, but where the market is open, it is Wednesday, December 10th, FOMC Fed meeting day, rate cuts. Jerome Powell might screw us over, might not. It really depends on his mood, I guess, of what happens later today and maybe later this week as well. The Fed meeting is later today, I think 2 p.m. Eastern or something like that. We are first getting the decision, and then he starts speaking, answering questions. Well, answering questions. The last couple of meetings, literally, it's him not really answering questions. But then again, it's always the same. No, but if I add the Mortal Kombat theme song after the gong, I think we are going to get a copyright strike. Although, no, I'm not going to try that. But anyways, let's have a quick run through the names that we follow. Let's pull up this page. Voila. Let's start with fintech. So, for the greens and the reds, it's like a House of the Dragon, but that's green and black. We do have Shift 4 that's a little bit green, 0.3% at the moment. MasterCard 0.2, Klarna is up 0.5, Visa is basically flat, American Express is also flat, and then Affirm is up 0.1%. Who's down the most? That's Pagaya right now, 2.7%. Webull is down. Why do I have this like this? Come on, huh? Webull is down 1.8, Sezzle 2.4. So yesterday, well, we did have a nice run over the last 3 weeks or so. Hood is down 1%, still sitting on that 50-day. D-Local yesterday, again, got that rejection right here. So that's down 0.8. Dave is down 0.3. SoFi is down close to 1%, now on that 100-day moving average. Chime is down 0.6, but here we are up just above the 100 for now. Adyen down 0.3, 0.4, and of course PayPal is down 0.5%. Neoclouds are all red, so Nebius continues here the pullback. We're basically where we were a week ago. Yes, close the poll. So 60, thank you for the reminder. 60% of you still think or thought that we would end the day green, 26 red, and 14 flat. So basically 40% say red or flat, and the rest say green. White fiber down almost 4%. Same with CoreWeave. Hut 8 down 2.2, Iron 3.6, Cypher 4%, and Applied is down 1.7%. As for our chip names, Micron is up 1%, Marvell is up 3%, Clack, Nvidia, and Applied Materials flat. Clack is up 0.6%. Then we have Intel down the most here, 3%, Lam Research 1.2%, and then the rest is basically down 0.3 to 0.8%. Big tech companies, we have Tesla, that's green 0.8, Amazon 0.7, Apple flat. Then we have Netflix down another 0.4%. So I do think we're going to stay around these levels for a while now. Very close to being, actually, it is a little bit oversold right now. Microsoft down 2.2%, Oracle 0.7%, Google 0.1%, and Meta is down 8% at the moment. Rubrik is up 0.2%, not by much. Duolingo is now down 0.5%, Salesforce 0.2%, Adobe 0.3%. They report later today. Actually, let's have a quick look at what the market is expecting. They told us in the last analyst conference that they're reiterating their guidance on. I do believe that they'll meet and beat the expectations. So for the quarter that they'll report later today, revenue consensus $6.1 billion, EPS of $5.4, and free cash flow of $2.6 billion. Those are the expected numbers for Adobe later. Today, I do expect here a double beat, but the whole focus will be on this whole AI monetization strategy. Melly, where is Melly? Ooh, okay. Melly is back just under $2,000. That is interesting. Yes, Melly is back under $2,000, which means new is new. Okay. Guess both of them peaked here last Friday for some strange reason. Okay, but Melly, just under 2,000 or at 2,000 right now. I still think this is a market crusher for the next 5-10 years plus. Oscar is down 2.1%, has been around these prices for now, 2 weeks or so. United Health is also down 8%, so we are definitely seeing a lot more red than green. CoreReef is now down 4.7, close to 5%, depending on when we are watching these things. Okay. Let's see what our favorite, well, not our favorite, but let's see what the other perma bull analyst is saying. Which is, you want to see the heat map before? Yeah, let's pull up the heat map. So this is basically it. A bit worse than before. So Microsoft Meta was like flashing red, but it's just 2.6% and 1.7%. And then the rest, not a lot of green unless you are looking really at Nike is green, 1.3%. PepsiCo is green, 2.2%. Then we have ExxonMobil and Chevron that are up 8% or so. What else? We have here GE, what is it? Verona, something like that. GEV. Yeah, GE Vernova. I think their outlook has been updated to the upside, obviously. So currently not great. We'll see what happens in a couple of minutes. Maybe we are getting like this usual market opens red, then we do recover a tiny bit. But let's have a quick listen to what Dan Ives has to say he says here, tech bull run to continue for 2 more years. Dum dum dum.
Dan Ives joins us in person, in studio, a global head of tech research at Wedbush Securities, and Arjun is also going to join for the conversation. Dan, fantastic to see you in the flesh. Thank you for stopping in. Yeah. Well, let me kick off with a broad brush question as we head into 2026. I think many would describe you as a perma bull on the tech sector in the U.S. Anything change heading into 2026? Or still pretty bullish on the space?
Look, the reality is it's still 10:30 p.m. that AI party that goes to 4 a.m. Because look, in my
okay, before we continue, this guy has a book of one-liners. It's 1:30 p.m. before we go. It's the 3rd inning of the 5th round of the semifinals. The godfather of AI, the Messi of AI, the Cristiano Ronaldo of this. This guy has one-liners for everything. Every time it's like what's the Apple one? I can't remember. He calls Apple Cupertino or whatnot. For everything, he has specific words, one-liners. But yeah, they're nice.
My view, when you look at this AI revolution, it's now going to the second, third, fourth derivatives. Software, cybersecurity, infrastructure, power. And look, I think the bears, they're just going to continue to watch this party from the outside looking through the windows.
Is it the hyperscalers that are going to continue to lead the AI trade, or are we going to see more diversification into other layers in 2026?
Yeah, look, it all starts with Godfather of AI, Jensen, NVIDIA, and now getting back into China. That's just another pop the champagne moment for them. But then you look at hyperscalers, you look at Microsoft, you look at everything that happened in Alphabet, Google. I mean, that's really been a massive turnaround story, right? I mean, I'd say the cab driver here in London was bearish on Google going into in the beginning of the year. Now, I mean, you're seeing it because, and I think you're just starting to see that in Amazon as well. But look, it's now going to spread use cases. That's why Messier by Palantir, in terms of what we're seeing there, MongoDB, Snowflake. I think that's going to be the trend here as the derivative beneficiaries of AI spread.
Dan, given that thesis on the derivatives, how much longer do you think this tech bull run has to go?
2 more years.
2 more years.
I mean, and I think that's conservative.
Yeah.
I believe we're going to be talking about NASDAQ 25,000, 30,000 over the next, 12, 18, 24 months. Look, this is the fourth industrial revolution. And there's someone like myself that covered tech stock in the late 90s. You'll hear all the comparisons. It's apples to oranges. We're talking about humanoid robotics, autonomous. The consumer AI revolution hasn't even started. That's going to go through Cupertino. I think that's why you're seeing Apple make those major changes. And now you're seeing a cooling of tensions in U.S. and China. That's bullish in terms of this AI trade.
Dan, in terms of 2 years, then sort of what, I guess, sort of pulls back that bull run? What derails it to some extent, in these cycles that we see in markets?
Yeah, look, we're going to have these white knuckle moments. I mean, you're talking about DeepSeek moment, Liberation Day, U.S. China, in terms of some of the sort of back and forth. NVIDIA, can they go into the U.S.? Can they go from U.S. into China or not? But look, those white knuckle moments, those just create the opportunities to own the winners in AI. And that continues to be our view. Call it perma bullish, but the reality is I think investors are underestimating the scale and scope of what this tech trade looks like.
Carol's going to jump into the conversation.
Dan, let's talk about specific stocks here. I know you.
Before he starts talking about specific stocks, have you noticed how many one-liners and the messy of AI and things he mentioned in the first 3 minutes there? Incredible stuff. Again, I know people say, oh, he's only bullish every single time, which again, he is. He's been bullish on Rivian at $130. He's been bullish on C3 AI at, I don't know what price target that was. But he's always also been bullish on the other names, the Palantirs, NVIDIA, and of course the other, let's say, easier names to be bullish on, and rode the bull wave on the upside. But he's also a TV analyst, and I think that's something that we all know. That's why I pull him up here, because he is a famous TV analyst. You don't see many big analysts out there go on TV every single day, tweet out 1,000 things every single day. No. You also don't see them wear flashy suits, cool sneakers and whatnot. But fine. He does what he needs to do. It's probably a very good thing for Wedbush. Right? Maybe it might be increasing their client base. But yeah, he is a personality. When he speaks, they get views, they get clicks. If they'll pull up another random analyst, maybe people will not listen to it. Doesn't mean that the other analyst isn't a good one. Doesn't mean that Dan Ives is a good one just because he gets clicks. It's just his flashy appearances, his way of speaking, right? The Messi of AI, Google of AI, Ronaldo, Jokic, Doncic of AI, or whatever sports person he wants to mention, it grabs attention. He does talk a lot with retail, whether it's on YouTube or on X. So he's playing the game. He's playing the game that he has to play. That's the thing. Whether you like it or not, that's up to you. Of course, we don't have to agree with Dan. Dan doesn't have to agree with you, with me. It's just another voice out there that speaks about certain things. Same with the complete flip side of things, right? He is known for bullish statements. Now, C3 AI was actually, he called it the LeBron of AI. I'm not lying. The LeBron, yeah, I think it's the, wait. Let me pull it up. Let me pull it up. 1 second. Yes, found it. Found it very quickly, actually. So, this was in 2023. What do LeBron James and Lionel Messi have in common? Well, they're both used by Dan Ives when he initiated coverage of Palantir and C3 AI. C3 AI was $138, down 71%, and the price target was $200 back then. The LeBron of AI is setting up for massive growth, the Messi of AI on the golden track to success. Of course, Palantir worked out very well. LeBron, not so much, which might reflect his time at the Lakers. So this was basically it. January 4, 2021, 12 months price target, $200 per share. C3 AI, the LeBron of AI, setting up for massive growth, initiating with outperform and $200 price target. Again, you miss some, you hit some. In this case, he did miss. I honestly, I don't know why he came out with this note with C3 AI, especially not why he called it the LeBron of AI, but whatever. But yeah, so he is in the camp of extreme bullishness, same as Tom Lee, and then you have the other ones. Well, you have the Michael Burry ones, let's say, which are known for only being bearish, right? In my opinion, if you're only known for being bearish, it's not the greatest thing out there, because the market stays way more bullish than bearish. Being known for being too bullish, I don't think is as bad as being known for only being bearish. Because what? Does the market not present you enough opportunities to find good investments, and that's why you always need to be bearish? I think that makes you a bad investor, in my opinion. But anyways, let's continue. Let's see what he thinks about 2026 and onwards.
Love Apple. Because you say 2026 is going to be the year when it comes to the AI revolution, and one time is going to be a game changer. Elaborate on what you foresee for the company next year.
Look, I think that you're seeing massive changes within Cupertino. I mean, they're ripping the Band-Aid off in terms of what we're seeing from a culture perspective. You've seen changes at the top, which they needed to, right? I think that's been part of the frustration. The last events at Apple Park, I felt like Michael J. Fox in Back to the Future. You know, because they're just really not going anywhere. Now, it's all about Google Gemini. That's going to be a key partnership. Then ultimately, you're going to see probably a paid subscription service as they launch into the spring. And you have the biggest install base in the world. Monetization is going to be key for Apple. The consumer AI revolution runs through Cupertino.
The consumer AI, what is it? The consumer AI revolution runs through Cupertino. Interesting stuff. Does he? I don't know how you can make this statement. We are getting the FOMC meeting starts in 4 hours and 10 minutes to be precise. Sorry. I mean, he's been bullish on Apple. Yes, Apple has gone up. It's now worth $4.1 trillion, but you cannot tell me that it's been the deep play out there. He believes that it's going to be deep play going forward because they will have ways to monetize AI, ways that others cannot. Will they? I don't know. But are they going to monetize Siri? Then we're going back to what I said before. ChatGPT can then monetize ChatGPT. Gemini can monetize Gemini. And is Siri going to be based on ChatGPT or Gemini? So I don't know. The iPhone upgrade cycle apparently seems to be doing well. But yeah, I don't know why he's been screaming Apple, Apple for a long, long time. Same with Gene Munster, who's been horribly wrong on Google. But now he's a Google bull because, of course, the stock has gone up. That's, of course, makes sense.
So how much upside is there in the stock? Currently, it's sitting at 277. What's your price target?
350, but look, I think if they get this right, you can have a 4 in front of it. I think that's ultimately where we see Apple heading as this all plays out, because when you start to put the monetization of AI and you put numbers together, I think it's $75 to $100 per share that AI adds to Apple. And look, it goes back to Google, right? I mean, you go back 6-9 months ago, everyone's like, AI is going to ruin their business model. They're on the defense, they're back against the wall. Now look at it, right? And I think it just speaks to how quickly this tide could turn.
In terms of that,
how can he compare Apple to Google a couple of months ago? Google a couple of months ago was not trading at over 30 times PE. Apple has been trading at 30 times PE, if not more, for quite a while. The comparison here to me does not make any sense. A couple of months ago, Google's business was intact. Just the market hated what the story around it was. But the reality was YouTube is growing, doing very well. Search is not slowing down. It's actually growing. Cloud is growing, expanding margins as well. And so you cannot compare it. You cannot compare a Google that was trading at 20 times PE forward to an Apple that's trading at over 30 times PE and has barely grown over the last couple of years. He's like this is the type of thing where I get the chat here where saying, oh, Tom Lee is up here, Dan Ives is down there, because Tom Lee actually makes sense when he talks about bullish arguments and he explains why these things will happen. Like a $400 Apple, because they are going to monetize AI. What does that even mean, to monetize AI? Siri exists today. Are they monetizing Siri? No, because first it sucks. But even if Siri becomes usable, how are they going to monetize it? Is there a way to monetize it other than doing the same thing as Gemini and ChatGPT? Probably not. Is a good Siri going to accelerate sales of iPhones and iPads and MacBooks and whatnot? Maybe, maybe not. I don't know what the stats are on people buying new products or iPhones because the AI is so much better. So again, making up stories here, that to me is always the biggest problem with a Dan Ives type of bullish analysis. Even on names that I do own, just sometimes doesn't make sense.
Tide turning. Some people are saying that the launch of Gemini, the latest edition of Gemini, the latest launch, was actually a bigger moment than the DeepSeek moment at the start of the year, because it really put Alphabet on the front foot again, and it's suggesting that they've leapfrogged the other leader in this space, arguably OpenAI. And we've heard that OpenAI has now, initiated code red at the company to basically step up their efforts and not let Gemini get ahead and lose market share. When we spoke last time, you said OpenAI could be looking at $1 trillion valuation if they were to come to market near term. How do you think about OpenAI now, and what's the right valuation?
Yeah, look, it's all in OpenAI's world. Everyone else is paying rent. No, look, Alphabet, they have made massive changes. We're seeing a lot of success coming out of there. But this is an AI. It's all in OpenAI's world. Everyone else is paying rent. No, look, Alphabet, they have made massive changes. We're seeing a lot of success coming out of there. But this is an AI arms race. And at the top of that mountain continues to be OpenAI, ChatGPT. But it comes down to like the reason they're taking stakes, just like you're seeing Jensen and NVIDIA, you're building out the stack across the board. So I don't view it as a circular financing red flag. I mean, this is an arms race in terms of, from chips to software. And you're not just going to have one winner. You're going to have many winners in this. And I think it speaks to our view that this tech bull market spreads to other areas of, of this tech ecosystem.
Does $1 trillion market cap still seem right for OpenAI?
I think that's probably conservative as we look at once it would go public over the next few years. When you look at where they could actually go, what numbers could look like, and then you start to think about 3 to 4 trillion being spent next few years, 4 to 5 trillion being spent over the for next 5-6 years. And look, for the first time in 30 years, the U.S. is ahead of China when it comes to tech. I mean,
$1 trillion is justified. $1 trillion justified is conservative. It's conservative. Of course, it is conservative when the numbers don't matter. There's this guy on Instagram and on YouTube, probably on TikTok as well. The guy with the phone that zooms in is like, come here, and then he says something. He tasted food, and he has like glasses, and he's like, this is so good. Takes off the glasses and throws it against the wall behind him. This is exactly what I wanted to do right now. It's like, conservative, $1 trillion. Conservative, $1 trillion. What is this guy smoking? That doesn't make sense. Anyways, Netflix, is it a buy right now? I mean, let's go back to where we were, let's say, a week or so ago, right? No deal. Was Netflix a buy then? In my opinion, yes. Is Netflix a buy if the acquisition goes through? In my opinion, yes. Is Netflix a buy if the acquisition does not go through, but Paramount buys Warner Bros? In my opinion, also, yes. I would very much like, I'm not an Intel, don't know why Intel pops up in my mind. I'm not a Netflix shareholder, but I do see the value right here. I do see them still growing with or without that acquisition. I do see them becoming more profitable with or without that acquisition. It's true that if the acquisition does not go through, but it's not their fault. One, they are getting $2.something billion straight from Warner Bros. But Paramount, which will become a big competitor, is getting suddenly a huge portfolio of IP. Right? It's suddenly Paramount and Warner Bros. Studios, two big players in the movie business, streaming as well. But in my opinion, Netflix is still Netflix. Could it go a little bit lower? It could. We are literally here in no man's land. It is a little bit oversold, but then again, oversold can stay oversold for a longer period of time, same as overbought can also stay overbought in a very longer period of time. FOMC meeting in EU, meaning EU time, it's the same. It's also in 4 hours. Is it still 4 hours? Yeah, 4 hours. So yeah, if they can't get, then it's still the licensing part, right? It's still the licensing part, but how many? I mean, I don't think you will ever see, if they don't own it, I don't think you will ever see Harry Potter or Game of Thrones or something like that on the Netflix platform. Forward PE 30 times for Netflix. I mean, if Apple can trade at 30 times and it's not growing as fast as Netflix, then I would say yes. But if you look at the growth rates, which I'll pull up in a bit, I think it's worth it, especially if you look at free cash flow. So Netflix is Currently at 31.5 times forward PE. Let's check this. So yeah, it's expected to grow earnings, basic EPS here, 25% in this fiscal year, another 27.8% in fiscal 26, and then another 20% in fiscal 27. Is that worth 30 times earnings? I do think so. I mean, growing above 20% for another 2 years in a row. I think we've all seen way worse. I think we've seen way worse than that. Then if we look at free cash flow for the company, and of course, this is the current estimates without an acquisition. Huh? So we are clear. If we look at free cash flow is expected to grow 32% this fiscal year, 32% next fiscal year, and then another 20% in fiscal 27. So yeah, I mean, 30 PE might look high until you actually look at the expected growth rates. Because again, if you look at the PE ratio, it's based on analyst expectations, right? It's not based on the company's, well, the company's expectations for this year, but not next and the next 2 years. That's the thing with forward metrics. It's based on analyst expectations. And then we know that analyst expectations do change quite a lot. Will I be streaming until the rate cut? No, I'm not that crazy. No, but we will come back later for the close and the Orcl Adbe earnings report. All right, let's have a look at where we're at right now, all in all, and then let's call it a midday. So let's see if we have some more green. Not much. Looking at some fintechs, it's almost 50-50 split. No one buys back like PayPal, and no one has the data PayPal has. Just wait for the breakout. I mean, you are preaching to the choir, my friend. But yeah, in the meantime, it is red today. Sezzle is down 1%, same with Pagaya. PayPal is down 0.5%. I mean, if we are red going into the Fed meeting and rate cut, then okay, means we might see a rebound after, towards the close, or could get worse. That's also a possibility. Because previously we did have like green day, poof, Jerome, he starts to speak. And if I speak, I'm in big trouble. When he starts to speak, he goes down. Everything goes down. But yeah, fintech, all in all, it's either green or a bit red, other than Bull and Sezzle, that's down just over 1%. As for the neoclouds, White Fiber is down 7.3, CoreWeave almost 5, Iron 3.6, Cypher 3.2, Nebius 2.6, then Applied Digital 2%, 2.2, Hut 8 1.7% at the moment. Chip stocks remains unchanged from what we've seen before, and big tech is still the same as well. Still the same. As for other specific names, Melly is under $2,000 right now, down 4.5%. Let's see if there is maybe a reason. There's not always a reason why stock drop or when the stock goes up, so you don't always have to find ways to justify a move every single day. Let's see. Okay, we do have one news, but it's fairly positive. So Mercado Libre will deploy Agility Robotics humanoid robot Digit in its San Antonio, Texas fulfillment center to automate repetitive warehouse tasks, improve safety, and boost productivity, with plans to expand the technology across Latin America. Okay, I don't see why this should be the reason why the stock goes down, but okay. Yeah, no, other than that, I don't see anything. Don't see anything else. Uber, probably because of some Waymo announcements and things like that, but the numbers we've just spoken about before are quite impressive for Uber. Oscar is down 1.8%, but again, same line right here. We do have, I do think, a vote in the US. Melly never goes up. What do you mean Melly never goes up? I think Melly is up, plus it's now sitting on that previous top from 2021, but Melly has gone up quite a lot over the last 3 years, I would say. And it does follow that pattern. It's like it goes up, rebounds on this blue line, goes up, rebounds on that blue line, goes up, rebound on the blue line, goes up again and again. And right now we do see it right under it, but wouldn't be surprised if we're seeing it rebound from there. The SpaceX IPO, it's more likely to be a Starlink IPO than a SpaceX, but again, there are lots of reports coming out. This is one of the reasons also why we're seeing Rocket Lab, maybe AST go up, although where is AST? Right here. More recently, but Rocket Lab, it also goes up because we're getting a lot more, well, some pictures with regards to the Neutron vehicle. No SpaceX. I don't think it's going to be SpaceX, but then again, who knows? Because right, Elon Musk has always talked about SpaceX remains private, but Starlink goes public. But hey, if he wants to take the whole company public, then okay, be my guest. Be my guest. I did see the over $1 trillion valuation that they might be seeking, which is quite crazy. Is quite crazy. I mean, Starlink is a very good business for now, based on the current metrics that we did get, the amount of subscribers, the amount of revenue that it generates. But SpaceX, yeah, SpaceX is space, right? Every time Starship blows up, it takes a hit. But yeah, it's good. I don't know how fast they'll go public because it will be quite a big IPO. So we'll see. But it's definitely positive, I would say, for space names, if they really will go at over $1 trillion in valuation, because then you have a potential re-rating of the whole industry, blah 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 blah. But yeah, going back to Melly, I know it sucks if you don't have fractional shares. Sucks to spend almost $2,000 for one share. But yeah, I'm still very bullish on the name. SpaceX failed in delivery to NASA. 10 Starships blown up. They are overdue, but hype goes on. What do you mean? It's a private company. They are, I mean, it's funded by SpaceX. I mean, funded by Starlink, I would say. Of course, starships are going to blow up. What do you think? You're going to launch a Starship and it's not going to blow up? I mean, SpaceX has done things that NASA hasn't done since its inception. So, of course, Starship is going to blow up. If it wasn't for SpaceX, I think NASA would have been irrelevant right now. But with new leadership, Jarek Isaacman, I do think that NASA could become, again, a bigger and better company. Thanks for a super chat. Am I buying anything here? No, I'm not buying. I mean, like I said in the Sunday video, unless we have crazy moves on the downside, I am currently done with my buying for 2025. I mean, we only have a couple of weeks left. So again, I've done my buying. I'll wait. And then we'll see if we do have some overreactions in certain stocks. I'll be opportunistic with my buying, but if not, that's fine by me. I think I've done well this year. I think my positions are well built. There are certain stocks, certain positions that have not moved at all. So yeah. Right now, not much in cash, I would say. I think, I mean, this year I started 2025 with, I think, 12, 13% in cash, which has served me very well, especially since the start of the year was quite volatile. Right now, it's closer to 3%, which, yeah, I could potentially increase it a little bit more. I agree, I could. And exactly, I mean, first of all, they keep landing rockets by themselves. Second of all, Starship, yeah, an apartment building size rocket on, I mean, not even on boats, on the arm thing. But yeah, we do have some. Okay, we do have now some stocks that do turn green. It's almost 50-50 here, almost 50-50. Expectations for Adobe, I think Adobe beats. Again, if we look at Adobe and then you look at what has happened with CRM, I think the same thing will happen. It's a cheap stock going into the earnings report. Of course, Adobe did get a little bump here already. But just like CRM, expectations are very low. Valuation is cheap. We know that they've reiterated their own guidance literally a month ago. So I think the setup is quite easy for them to beat expectations. And then we'll see what they say during the earnings call. There are definitely going to be a lot of questions around the third-party partners, right? The Gemini, Runway, Black Forest, and now the announcement that Adobe will integrate certain products directly into ChatGPT. How do they monetize all of it? Their own guidance with regards to AI-specific business. So we'll see. The move will be made probably in the earnings call, not in the results themselves when the press release gets out. For those wondering, this is basically it. FOMC meeting, 3 hours and 47 minutes. But we are getting the dot plot and the rate cut announcement earlier than that. And yeah, let's not forget that SpaceX went to space to retrieve astronauts that have been stuck there for a long period of time. Small detail. Tout petit comme ça. All right. I have a poll up for those that are still here and watch football, real football, the Champions League. Real Madrid versus Man City tonight, where 42% say Real Madrid win. You guys have not watched them play over the last couple of weeks, I think. Then 32% Man City and 25% say a draw. Yesterday was again a big disappointment for myself, with Chelsea losing at Atalanta 2-1. It was honestly another shitty performance, really shitty performance. 2 silly goals, I would say. Of course, who scores? The Belgian player. CDK, Charles de Ketelaar. He scored the goal. We just let him go into our box and then he shoots and boom, it's goal. The first one was just Fofana not marking his man yet again. Same goal that the one we've conceded against Arsenal. So yeah, bad performance. I don't know why we didn't put on Estevao or Andre Santos. I don't know. Where am I from? I'm from Belgium, and I support Chelsea. Then what did we have? We had Inter Milan against Liverpool, absolutely robbed. It's not a penalty. It's not a penalty at all. No day of the week is that a penalty. So I don't know what happened there, but okay. Atletico won. Who won as well? Barca won 2-1, but yeah, Chelsea they didn't play well. They didn't play well. But the Inter Liverpool one was not this weakish penalty. So neoclouds are still taking a hit while fintech names are recovering a little bit. So we have more greens here. Cheap names, still a bit of the same, I would say, although some turned green. And big tech is the same. Amazon, Google, Apple green with a little bit of Tesla. And Netflix is still down 1.5% at the moment. So fintech more green than red right now. Neoclouds still red. Chips, so also 50-50 split. And big tech is also a 50-50 split at the moment. Why not Bruges, Anderlecht, Genk? Well, actually, it's Standard de Liège in Belgium. If I had to choose one of the, I mean, if you ask me for Belgium, it's Standard, but it's Chelsea as a whole. Now you would assume that I would take Antwerp because it's or Beerschot, yeah, but no, it is Standard. It's because of my grandfather, not because I've made that choice. But yeah. Why are Nebius and CoreWeave down? I don't know. Why were they up yesterday? It's like literally CoreWeave is back to prices since yesterday. Iron, I would say almost yesterday as well. And Nebius is coming down a little bit. But then again, last week we were at $100. Why did it go to $100? Right? When the stocks go up, nobody asks questions, but when they come down, they do. So yeah, we'll see. It's still here at the 100-day moving average. Previously, it did float just under it, but then recovered. I'm not asking questions with these types of small moves. These stocks are very volatile. Let's actually check the VIX. So okay, the VIX is today it hasn't moved much. Yesterday barely. On Monday it was up 8.2. So we are seeing the VIX recover a tiny bit since the lows on Friday. We'll see it. We'll probably be moving quite a lot later today, but we are far from where we were at the end of November. China went down because CoreWeave went down because China rejected NVIDIA GPUs. I don't see the correlation, right? Because there is no CoreWeave in China. But you might say that, just the market thinks this way. I mean, the market is stupid, but I don't think it matters. And the news of China rejecting NVIDIA GPUs was yesterday, and yesterday CoreWeave was up 5%. So SpaceX to raise over $25 billion in blockbuster 2026 IPO. It's quite a lot of money. That's quite a lot of money. But yeah, we'll see. Maybe if 2026 we get a SpaceX, maybe Anthropic type of IPOs that could revive the whole market. I mean, the whole IPO market. I mean, could be. You should show sports clips highlights. I mean, if I do show, I'm getting banned on YouTube because those things are the heaviest copyrighted stuff on YouTube. Like if I show you a 1 minute clip and highlight, the stream goes down probably in a minute or two. Would I buy the IPO of SpaceX? No, I would not. Why would I buy? I own Rocket Lab. I don't see a reason why I should be buying a SpaceX IPO. I'm pretty sure the numbers will be crazy and all, but I don't see why I should be buying it. Question about Wise. What do you think about Wise, and do you use it? I do use Wise because I get paid through it. But I mean, I just get paid to. If I would not be paid through it, I would not be using Wise. Have they been doing well? Let's see. Visa. I mean, the stock has been doing well since April, definitely. But has the business been doing well? That's the bigger question. Of course, it's another dimension than Rocket Lab, but I'm also looking at my potential upside. At over $1 trillion valuation for SpaceX, how big will my upside be? Rocket Lab is at $30 billion. When I bought it, when it was closer to $4 or $5, I said this is a $100 billion company in the making. So from here, that's another 3x, which will happen eventually. I'm not saying it's going to happen in a year or two. Even if they reach $100 billion in valuation 5 years from now, I'll be very happy with that as well. The core purpose of SpaceX is colonizing Mars. Yeah, space explorations, Mars base, base on the moon as well. But that's why you have Starlink. Starlink is the business that should be funding this. Plus, shareholder value should increase through that. Wait. I showed you the wrong Wise. Wait, uno momento, because Wise is on the voila here. This is the one. Much better. Yeah, makes more sense. So 8.44 pounds. I mean, margin-wise seems quite good. Space exploration should be the first collective goal on Earth. Countries should work together. Yeah, I mean, space exploration. Then you go and you mine stuff. It's going to be a very, very big business. So revenue have been increasing. Okay, 10% last 12 months. 12% for this year. EPS is not that crazy. I mean, mining asteroids could be a very, very lucrative business, right? I do wonder when we'll put another man on the moon. I think that's going to be a huge, huge event in the next 4 years. Okay, what do we have here? Active customers grew 21%. Okay, year over year over the last 2 years. Two different things here. Uh, 18% first half 25, first half fiscal year 26, and this is like very empty, huh? It's like a lot of lost real estate here on these on this slide for Wise. They could have basically put both of those things in one. Look, it's definitely a growing business from what I'm seeing right now, but is it as interesting to me? Not really. Take rate cross-border is coming down. That's not surprising. Okay. Yeah, I'm not that interesting. Not that interested. Sorry. All right. So we're going to close out right now, and we'll come back. We'll come back for the Oracle and Adobe earnings report, which will be also just after the FOMC meeting and the rate cut. So we shall see each other in a bit. We'll see what Jerome is going to tell us, and then we'll do Oracle and Adobe. I think probably with Amit, and that might also move certain stocks in the market. So, with that said, thank you all for joining me in this fine Wednesday. Hopefully, Jerome doesn't screw us over later today. But then again, for being honest, does it change anything for long-term investors? Probably not. It will suck for an hour or two, but maybe we'll be a bit more bullish than expected. We'll see. Anyways, that's all I've got for you right now. See you all in the next one. I think the cops are here to get me. So see you all in the next one. Bye-bye.